All right, today we're doing a little time traveling, digging into the tax archives to talk about a form you probably don't need to think about anymore, the GSTR-9A. Now, if you were ever part of the GST Composition Scheme, this name might ring a bell. For everyone else, hey, think of it as a quick history lesson in tax compliance. But look, before we get into the weeds, let's just get right to the most important question on your mind. Is this something you actually need to worry about for your filings right now? And the answer for pretty much everyone is a big, resounding no. Phew, so you can relax. This form is officially a thing of the past. Our goal here is just to give you some historical context and clear up any old questions you might have from the early days of GST. So, with that big question answered, let's rewind the clock a bit. What exactly was this form? What was its purpose when it was still around? To put it simply, GSTR-9A was the annual report card for businesses under the composition scheme. You know, since those businesses have much simpler tax rolls based on turnover, they needed their own special year-end summary. And this was it. Now, the key thing to get here is that this form wasn't about entering a bunch of new data from scratch. Not at all. It was really a consolidation. It just took all the information you already filed in your quarterly GSTR4 returns, your sales, your purchases, the tax you paid, and kind of rolled it all up into one neat annual package. Okay, so we know it was for composition dealers. But as with all things tax, there were some nuances. Let's really pinpoint who had to deal with this form and who didn't. And this slide really draws a clear line in the sand. The rule of thumb was simple. If you spend even one single day of the financial year under the composition scheme, GSTR-9A was meant for you. On the flip side, if you were a regular taxpayer the whole time, a non-resident or an ISD, a business that just distributes tax credits to its branches, you could just completely ignore it.
But here's where it could get a little tricky. What happened if you switched teams mid-year? You were a composition dealer and a normal taxpayer, all within the same 12 months.
So picture this. Let's say your business was cruising along under the simple composition scheme for the first 9 months. But then, for that final quarter, you switched over to being a normal taxpayer, maybe because your turnover got too high. So how on earth did you file your annual return for that year? Well, the answer was actually pretty logical. You had to file 2 separate annual returns for that 1 year. You'd file the GSTR-9A to cover the 9 months you were a composition dealer, and then the standard GSTR-9 for the 3 months you were a normal taxpayer. It was a clean split for a split year. Okay, here's another one we used to see a lot. What if your business closed down or your GST registration got canceled halfway through the year? Did you still have to file? And the answer to that was a definite yes. The requirement to file an annual return didn't just vanish because your registration ended. You were still on the hook to file GSTR-9A for that part of the year when your business was active and registered. All right, so now that we know who had to file and when, let's do a quick refresher on how the whole process actually worked back then. Before you could even dream of filing GSTR-9A, there were 2 big hurdles you had to clear. First, obvious one, you had to be a composition dealer. But the second one, this was the biggie. You had to have filed all of your quarterly GSTR4s for that year. If even one was missing, the system would literally block you. No GSTR4s, no GSTR-9A. Simple as that. Now, inside the form itself, these were the key sections. But here's the good news. Most of the hard work was already done. The numbers for your sales and purchases were auto-filled from your quarterly returns. You could tweak some things, sure, but notice that tax paid column? That was locked down. The government's view was, hey, you already paid that tax with your quarterly returns, so that number is final.
And that brings us to some of the really critical hard and fast rules about GSTR-9A, the stuff that was just set in stone.
And honestly, if you take one thing away from this whole explainer, let it be this slide. Even though the law required GSTR-9A, the government ended up making it optional for the only 2 years it was really a thing, 2017-18 and 2018-19. And then, from 2019-20 onward, it became completely inapplicable. And that, right there, is why this form is basically a historical footnote now. But let's say you were one of the people who did file it, maybe before it became optional. What happened if you find a mistake later? Could you go back and fix it? The answer? A hard no. Once you hit that submit button on GSTR-9A, that was it. It was final. There was no edit button, no way to revise it. You had one shot to get it right. And if you were late, there was absolutely no getting out of the penalty. The GST portal was designed so it wouldn't even let you file the return until the late fee was paid. It was an automatic, mandatory part of the process.
So if you couldn't revise the return, how did you fix a mistake where you underpaid tax? Well, there was a specific process. You had to declare that extra tax you owed in the GSTR-9A itself, but then you'd pay it using a separate form, DRC-03, and that payment had to be made directly through cash.
So let's just wrap this all up, shall we? GSTR-9A was the annual summary for composition folks, built from their quarterly filings. It was really only a big deal for 2 financial years, and even then it ended up being optional. And most importantly, once you filed it, there were no do-overs. And that leaves us with one last thought. While this particular form might be history, it's a great reminder to look back. Are all your records from those early, chaotic GST years totally in order? Because good compliance is always current, even when the forms themselves are a thing of the past.